my computer for the first time today. Obviously, of course, I know what I'm looking for. Already relative to like euro and pound standard strategy, but because I look at my phone and I literally trade off my phone. But let's sort these sessions out first of all. We're just going to do the outlook basically of what we're looking for. So let's just. If I just delete, it should just come. Yeah. Not annoying, because we're looking for a nice 1 hour bar close, and you would like it has to be a nice one too, because we are we'll get on to why, but yeah, I'm also eating too, so just bear with this. This is like a chill outlook. So basically, let's keep an eye on GU too, the GU chart. Same thing we're looking at on this, but right. So we start on the monthly. What we can see is a decent price coverage push to the upside, with a wick rejection at the highs of this in-play Aham push, which is also the 60, like the fib region of the external push to the downside. So you got a wick rejection bar close sat at the region amongst the in-play Aham push, which is at the highs, suggesting that this push may start to be in the top and out phase, and like for like bearish bars to start to form at this region, and basically signaling that a reversal is near, entering into that stage of where like bearish bars then sort of close, then a reversal is near, ultimately not yet prevalent in play, but it's near, in terms of like waiting for that like reversal bar confirmation close forming, like backing up the case that yes, a reversal is likely in play now. And for example, the push, it's now set to push lower, for example. Of course, that's not likely yet. It's just, it's showing wick rejections at the highs. It's like you kind of want to be aware of, you just kind of want to wait for how next bars close, like basically to get a read on, like for example, how bars in this region are likely to form, and basically how the push is poised to continue to keep pushing. 2 week. The 2 week recent bar closed as like, well, after you have to first consider this. So like you push to the downside here, wick rejection at the very lows, an overextended push to the downside, and then this push to the upside wasn't very long lasted, and then it started to wick reject at this high region, although sat right at the very lows. And then anyway, it followed suit with bearish momentum, like a wick rejection, bearish bar close at this region. You'd still kind of want to wait for how the next bar closes at this region, and then anyway, this bar kind of closed a wick rejection in just an iffy area overall. You again would kind of just want to look at how next step lower time frames close, and basically be aware of how next bars close. Now the next bar, how does this close? It closes again bearishly with a wick rejection, so same thing. And then the next bar closes a wick rejection at the overextended region. with not really a sufficiently bearish convicted like bar close, like with bearish momentum there basically, and it just started to wick reject at the very lows. And then anyway, you got after this at the bottomed out region, a sufficient bar close, but it's like sat at the region where like of the lows of the current push what's in play to the downside, which then started to wick reject at the very lows. And so it's just a bit iffy basically. But then anyway, this push to the upside unraveled. You got a wick rejection at the highs and a bearish bar close at the the overextended region of a healthy kind of quantity and price coverage push to the upside, and then bearish bar close. But so basically the reversal nearing relative to the 2 week. It's not yet in play because there's not been like a heavily convicted bearish bar close. After the push started to wick reject, and then bearish bars started to close with further wick rejections, suggesting that the market is topped out at a topped out region. Do sec. Anyway, going down to the weekly. You can see that this like push to the downside started to wick reject, and then heavy bullish momentum came, but then also it resulted in the push being very overextended in one bar. And it's kind of iffy as to how subsequent bars after this are poised to form. Because it's that overextended region, it's like our participant over relative time periods to the time frame chart perspective being looked at gonna continue. Is there likely to be momentum at this region? Well, look at how the most recent bar closed the way it did amongst whatever region of the most prominent push is that's been in play. It's at the very highs and it's weight rejecting. It's like there is a lot. There could be some steam left here. But anyway, you just utilize next step lower time frames for that to see how time frames below in play and pushes are like most recent bar closes amongst whatever prominent most recent pushes that have been in play relative to those time frames are closing however they are, suggesting like is there like a push to the downside and wick rejections possibly leading that yes. The weekly is possibly set for upside a little bit, but anyway, the next weekly bar started to wick reject at the overextended region, and then also followed with a nice bearish bar close, suggesting that yes, from this point the market is likely to retrace. But then you kind of got this bar here which wick rejects at this low region, and doesn't really close sufficiently bearish, meaning like there might not be the momentum there behind this push that would fuel it to continue. But to be honest, I would just kind of wait for how the next bar closes out, because like it is a wick rejection to the lows. If this next bar kind of forms kind of bullish, yes, it could kind of continue, and basically this push to the downside could have like wick rejected, kind of quote unquote like reacted, and it may now start to have the reversal. Now, anyway, so yeah, got a wick rejection at the lows of a possible SST short term push to the downside, which may result in a reaction and a reversal to the upside, which you would then keep track of how that push is likely to go on and unfold like based on how bars close like amongst the region of that in play and push. Meaning like is it fully thorough closed momentum bar closes to the upside, waiting for like basically the push to continue pushing, and it's not likely that like the push is going to start to top out soon in terms of seeing like wick rejections. But anyway, so yeah, the weekly is actually kind of iffy, to be honest. The most recent 4-day bar close, well, it's kind of just at the lows, wick rejecting. 3-day. I swear that bar closed. Oh, yeah, good. So 3-day provides the out of the current day bar closes out of the 2-day to 4-day, provides the most recent indication as to what way inclined, or basically how most recently the pushes relative to these time frames are poised to continue to push based on how the most recent bar closed the way it did amongst whatever in play item pushed that most recent bar closed amongst region. And it closed, so the market pushed to the downside, wick rejected, and then it had a bullish bar close at the very lows of this push to the downside, which it was kind of healthy candle quantity-ish, but it's just started out an overall iffy region to some degree. But then you've got this wick rejection to the upside. You kind of want to see what is behind this on next step lower time frames, and basically whether like this on a lower time frame is like a healthy candle quantity push, which is like got bars, then for like a decent candle quantity, and then wick rejections forming at the topped out region, and basically see how this wick rejection is likely to play out. But then anyway, you got this 3-day bar close, kind of amongst short term push to the upside, but you could also make the case it's at the lows of a push to the downside that's bottoming out, but then you got like a nice bearish bar close with somewhat wick rejection. It's maybe slightly to be a short-term push to the downside to about like, I don't know, I would probably say about here. So I guess you can just mark that out. Basically marking out the region of prices from the most recent bar close, where it would be likely that a buyer's intent is poised to unravel too. I don't even know if it's went there already. No, it hasn't. But yeah, basically this is the region of prices from this most recent bar close, where over the next 3 days, prices in this vicinity over the next 3 days are poised to be seen as bearish, and basically for the market to primarily push to the downside to at least this region, aka participants to remain biased down to this region at least, based on the like close off this bar and where it closed amongst like the region of what in this case short term push to the upside. It closed the way it did, wick rejections, and then a nice bearish bar close, suggesting that the reversal is possibly in play. And then basically how this push is poised to keep pushing, like. And then anyway, if you go down to the daily, I don't think you had the 2-day bar close. Yes, you did. So the 2-day shows us even better. You've got a push to the downside, wick rejection, bullish bar closes, kind of forming at the lows of a push to the downside, and then you kind of got another bullish bar close, but it's kind of a lack of momentum, and basically there's not likely to be as strong of a follow through with a bullish push to the upside. And anyway, you start to wick reject at the highs of this region, and then that kind of shows like wick rejections, and basically maybe there might not be much momentum left to continue pushing. And anyway, you got even further confirmation here, wick rejection again, so it's at the highs of a push, and then you got a nice bar close, suggesting that there might be a reversal from this point. So yeah, daily you got that even, you got this a better insight, an even better insight provided shown on the daily with regard to how the structure, what made up for example, the 2 and the 3 day actually formed the way it did, and what it intricately went on that comprised those time frames to look the way they did. And I mean, you've seen that there was wick rejections at the highs, but anyway, so you got a push to the upside, and then you kind of got like it opened here basically because it's a Sunday bar close, so just factor it in if it was this. And then you kind of just got another wick rejection to the upside, and then like a doji basically sat at the topping out, like basically in the procedure of topping out, and then entering into the reversal stage, meaning like bearish bars closing, right, at the like high region of the push what is in play, of the most prominent push what's been in play up to now, which is this. And anyway, you get that here, you get a nice bearish bar close at the like topped out region, basically off like wick rejections having formed. And then a bearish bar close followed, and then basically after like at the highs of this push to the upside, wick rejection showing, and then a bearish bar close. It's likely that this pushes lower basically, and follows suit with that reversal pushing lower. being the new in play and push, and where this like most recent bar closed the way it did, kind of at the lows ish, full of nice bearish momentum in the contextual position of where this bar closed the way it did, being amongst the highs of a push that started to wick reject and basically top out. Because I mean, if you think about it, right, if it pushes at the highs to the upside and then you got like wick reject doji bar closes, it kind of shows like a lack of follow through with regard to the direction that the market pushed to this point where dojis are now forming. It's like, is that they likely to be momentum from this point? Likely not. And especially when you got wick rejections on that side where like the market's tested, put like gaining strength and it just didn't follow through. So it's like at the highs of a topping out push region, and then you got a bearish bar close signifying that there's likely to be a retrace from this point, and this push in play is likely to just continue to expand lower. 12 hour, however, it's like short term pushes what are in play. So you got this push to the downside the way this most recent bar close like amongst whatever in play and push it is amongst, which is this push to the downside. It closes a wick rejection at the overextended region, which you would definitely want to consider and factor into your decision making, because this wick rejection could easily pull up to like this basically. So from here, you know, you got like the most recent bar closes a wick rejection. It could easily push from this point up to around here, and then it could also then gain traction, then gain momentum and build upon like that, build momentum basically and gain strength. So you'd want to consider that. The 12 hours a bit iffy, to be honest, with regard to how its push is poised to continue to keep pushing. But then obviously you go to the 8 hour and you got like, you kind of sat at the very lows of a push to the downside.